Welcome to this education event that is basically about technical analysis tools, and the first and foremost of all is the chart. I'm going to go through explaining to you different chart types, what information is contained within them and how you can get that certain bits of information out of them. We'll be looking at line charts. We're going to be looking at bar charts. We're looking at candle charts, and also have a very quick look at what they call swing charts. So some of these you will be using, and at the end of it, somewhere on the line, you will end up making your own choice as to what sort of charts you're going to be using to help you with your investing and your trading. This is going to help you to understand what's going on in the marketplace and what's happening with prices and price movements within different companies, within different indices, or wherever. As always, this information that's contained within this, it is under no circumstances must you consider it to be being offered as advice. The reason being, if you need advice, you need to consult your accountant, your financial advisor, or your financial planner, the people who can work with you to understand your risk profile and your risk capacity. Nothing worse than getting into a sort of trading or investing in environment if you can't sleep at night, or if you're going to need to spend any profits on psychiatric help. So you really do need to be aware of your risk profile and know how you're going to cope. There's always a risk when you're doing any investing. That includes property, shares, and cash at bank. So there's nothing in here must be considered to be in any way advice, as in what companies to buy, to sell, or to hold. We're going to try and unfathom or pull out from these things called charts decent bits of information that's going to help us to make some money, make some decent profits. So knowing some of the chart types is going to be a help for you, so you know what's in there, and you're going to end up with a preference, the sort that you're going to use for the rest of your trading or investing life. It is often said by technical traders in particular, it's all in the charts, where the market's going, what it's doing, not just what it's currently doing, but where it's going. At a later stage, once you've got the basics of charting under your belt, we'll be able to show you how to identify how the charts can tell you where the market is going and how long it's going to take to go there, with a remarkable degree of reproducibility. So it's all in the charts. That's the mantra of the technical trader. Charts can tell you, is this market going to continue going up, or is it going to crash and burn? It's all in the charts. Okay, the charts themselves, very, very simple little beasts. You'll see along here, along the horizontal scale, this is where time is plotted. And on the vertical scale, this is where you plot the price. So effectively, all you've got is a simple price by time plot, or a chart, or graph, or a graph, depending on where you put the emphasis. And you will notice slightly different to some of the charts that you might have seen in the past, because here you'll notice the price is put on the right-hand side. That's a personal preference. I prefer them up there purely because any of the price action that's getting closer to the chart can give you a closer idea. You can, on most pieces of software that you do this, actually put the price on the left if you so desire. There's nothing unique about it in that one. You can just choose where you want your price scale to be. Now, time, you'll find I'll be doing mainly with weekly charts here during this presentation, but this could be quarterly, it could be monthly, it could be weekly, it could be daily, it could be 4 hour, It could be 1 hour, it could be 20 minutes, it could be 2 minutes, it could be 1 minute. Either way, whatever you do, you're going to have time across the horizontal scale and price on the vertical scale. Now, if we move in and look at, I'm using the ANZ Bank here just purely for demonstration. The nice reason is it's a good solid company and it starts with the letter A, so I didn't have to go too far into the alphabet. Now, this is the sort of thing that you often see on news reports. It's what they call a line chart. And the line chart is made by simply joining up the closing price or the last price that a particular share traded at during whatever the period is that it's working on. So this one here would have been the last price that was traded during that week. That was the last price traded at the previous week. That was the last price traded on the week before that. So it's where has it come, in this case, because I'm using a time scale of weekly, this is telling us the week by week, end of week prices that were charged, that were actually traded. Now, sometimes this can give us some decent bits of information, particularly when we start going into some pattern work, as you'll see when we get through it a bit further. But it is simply week on week in this situation showing us how the price has moved. The next one we'll move on to is what we call the bar chart. Now the bar chart is quite an interesting little beast, and what is plotted here is, you'll notice up here, this again is weekly, and again we have price on the vertical scale. This price up here represents the highest price at which shares in this company traded during that week. It's called the high price for the price period. This one represents the lowest price that was actually traded for that particular company during that time period, in this case during that week. So here we have the high and the low. Now these little pieces off to the left and the right, they're quite important as well, because this one on the left that points out to the left, that is the opening price. That represents the price at which the first trade was done for this company during the time period. So that would have been the first trade done on Monday morning when the stock market opens. This one that goes off to the right, that is what they call the closing price. So that would represent, just as we had in our line chart, that is the closing price for that time period. So here we have a chart or a representation of the high, the low, the open, and the close, and it's joined with a bar. Now our technical analysts are pretty basic sort of people. They call that a high, low, open, close bar chart. Now if you get a little bit familiar with these things, some people just call them HLOC or HLOC bar charts. And if you get really familiar with them, you simply drop all that other stuff and simply say bar charts. Okay, so you can actually follow it here, and this is the original version where they're done all in the one color, and you get the relative action. See this one here, it closed a week here, it's just under $32. I know that because there's the $32, and that's where the closing price was. And it opened up here near $32.50. So something happened over the weekend that made that opening price, or the shares in the price of shares in this company, were perceived to be worth more than they were at the close of the previous week, on the previous Friday. What that could have been, don't know. Anything at all could have happened. Some statement by somebody, something happens in the economy, something happened on Friday night in America that causes a change in what's happening to the way people perceive shares as a solid investment. Either way, something happened. Just like down here, there was the close on Friday, there was the open on Monday. So once again, high, low, open and close. It's on a bar and it's a high, low, open, close bar chart. In future presentations and education events here, we'll actually show you how this relationship here between these two bars is a very strong indication that that particular market was about to drop. Because be it in some cases you get 1 bar, 2 bar, 3 bar patterns that you can gradually work out what they mean, what they tell you. But for now, we are talking about the bar chart, high, low, open, closed bar chart. Now, when they're put together, you end up with something like this, where you see the whole thing's put together. And this is now becoming useful for us. In later events, we'll show you how to draw trend lines. We'll show you how to use horizontal lines to identify areas of the technical term support and resistance. So we'll bring all those into you. But first of all, just get to appreciate what this chart is telling us. Overall, you can see it's got upward movement, downward, upward, down and side, then a burst out, and then it's just going sideways along here. Now let's have a look also. This is giving us a lot more information than what we had from our line chart. So if we put our line chart over there, you can see how this thing goes together, where it just looks at the closing prices. Round here, you'll notice, let's see, I think we've got something a little bit further on. Okay, this is the combination. There's your line chart, and overlaid is the high-low, open-close bar chart. From the line chart, you would see that this price here was in fact the highest price that was achieved during this price movement. And it came down, back up, and has gone sideways. However, that's quite incorrect, because when you see the high-low, open-close bar chart, you'll notice even though that was the highest closing price of the group, there we had a higher price was actually traded before the price action fell off. Bit of a rise again. And then, notice here, yes, there's a slight rise between closing prices, but you'll notice how it opened, dashed up above your $36 mark here, then came back and settled back near, down here, in the bottom third of the bar. So if we were just going on line charts, we would see that as the highest price. However, we've had other highest prices, and you can see here that the sentiment involved in buyers and sellers and their action is actually driving the price down. That tells us a lot more information. Okay, and what we're trying to do is get information out of the charts. So line charts do have a place. However, you'll find that bar charts will give you a lot more information and will help the trader in particular to identify what's going on. For investors using monthly charts, you'll find that the high-low, open-close bar charts are also far more beneficial because they give you the full story, or a much fuller story of what is actually happening. Now the next evolution from the bar chart came colour. Now this is exactly the same chart as I showed you with the black and white, straight out black bars, but here you can see the smattering of green and red. For those of you who are maybe red-green colorblind, most charting software that you get, you can in fact change the colors so that they suit you so that you can actually identify it. I like the red and the green because of the upward nature of the green and the downward nature of the red. So it's just a nice way, again, to help the trader, or mainly the traders, to identify where is the substance. Is it driving the market up or is it driving the market down? The more green, it generally ends up meaning that the those who we call the bulls, those who drive the market up, are the ones who are controlling the market at the moment. Now, you need also to be sure of how whatever the software is you'll be using is in fact demonstrating this, right? Well, what sort of patterns they are using. This particular one is from a crowd called IC Investor, from the Investor Center. Very, very good software. Now, its way of determining what is red and what is green is based solely on the relative position of the closing prices. If the closing price of a particular bar is higher than the previous bar, so there's a closing price, that close relative to that one is higher, therefore the whole bar goes green. Down here, that closing price is lower than that closing price, therefore the whole bar goes red. There are different ways of doing this. Some software has it that if the opening price is lower than the closing price, the bar goes green. And likewise, if the open is higher than the close, the bar goes red. The difference is this one, it's relative based on closing price to closing price, whereas others take open to close to give the color situation. Minor point, won't really cause you too much trouble. Whatever it is you're going to be using, you'll find you will in fact get to know it quite well and get to know what it's telling you. If you like color and you get a lot out of color, you'll probably find that the next type of chart, what we call candle charts or candlestick charts, they're full of color. Even when they first started, they were called Japanese candlesticks, and it was only ever one color. So if the candle was colored in, it means that the close was lower than the open. But these days they just make the whole bar go depending on the relative position, again, of the open and the closing price. For example, we know that, so just the anatomy of one of these. See this candle here? This part, the sticking out part between there and there, that's part of the wick, and that is also the wick. So it's got two wicks, one at the top and one at the bottom. And the rest of this is called the body of the candle. So wicks and bodies, parts of the candle. Now, there's a certain similarity between this candle and this one. Well, certain similarity in size. You'll notice that wick is not quite as big, but this one, we know that the opening price was here and the closing price was up here. We know that because this body, in fact the whole candle, has gone green. We know that this candle opened up here and closed down here. Reason being, the body and the wicks have all been coloured red. So you can get a lot of information just purely based on what's presented and how it's presented. There's one heck of a debate goes from people as to whether or not you should use candles or whether you should use bar charts. It's going to be up to you, as you'll see very, very shortly. So these candle charts, they are in fact a variation of the high-low open-close bar chart. You can get the same sort of information out of them. However, people have spent a lot of time giving different patterns different names. Some of them are worthwhile, some of them are just, well, okay, you've learned to speak another language. But it's up to you as to which way you're going to go. Now we move on to another sort of chart. Now this one is what we call swing charts. If you've heard of swing charts, sometimes called Gann swing charts. So the ones made popular by W.D. Gann, a trader from the around the 30s. And this is a representation where usually this one, they take time out of it. It says weekly here, but that only, these are not week by week by week. This takes time out of it. You keep taking your line up until the price actually closes down. Then you come across and down. Going into these particular charts, these swing charts, that is going to be the subject of its own lecture, its own presentation, its own talk. You will often hear about them. It can help you to identify trends, because in this case you'll see how you've got these high points are getting higher at the same time as the low points are getting higher. So as soon as this share price gets above there, that tells us that this particular price is in an uptrend. And from a trading perspective, that's the opportunity to buy shares. And if you're going to do that, you put your stop, in other words, where you're going to get out if the price turns and goes the other way, will be placed just under here. So it is a very, very useful trading device, and we will spend a lot of time on it later. But for now, I think it's going to be better and serve you much better to get to know either bar charts or candle charts. The sad thing for you is my preference is bar charts. And the only reason for that is because that's what I learnt on. Because many years ago, before computers, personal computers were so readily available, I used to hand draw the price action of our charts. And when you start hand drawing things, it's much easier to do bars than it is to draw candles. So that's possible. That's the only reason I can think of why I do have a preference for candles. And also, for bars, but also I do believe that it's far less cluttered than you will get in the candle charts. But somewhere on the line, you're going to have to make a decision as to which one's going to give you the most information, and you use that. Now, we did these. We talked about it. This is a weekly price chart. This is showing the price action from the open to the close of 1 week. Now, generally, a week is considered to start on Monday and finish on Friday. There are bits of software where you can change the start of the week and the finish of the week. Now, in that case, you're going to need to just work out what you're going to do with weekends as well, that goes in how they're going to be represented. But quite frankly, I'm more than happy to work on a Monday to Friday week. Again, it's simple and it's readily available in many instances. Now, you can usually convert from weekly charts to daily charts just at the click of a button. So this price information here, if I convert that to daily, you'll see down here, gives us the daily. So all of these bars here, so there was a Friday, Thursday, Wednesday, Tuesday, Monday, okay, and so on, it goes back. Same story, high, low, open, close. You'll notice here, that's probably Christmas Day and Boxing Day, two public holidays where they simply bring the closing price straight across. This would be New Year's Day. Again, see, there's no high or low. They simply allocate the closing price to the days where there's no trading. Now, different organizations, different bits of software give you different ways of handling it. See there would be what's called Australia Day, 26th of January. Same story, high, low, open, close, bar charts. Again, same colouring. Remember, this colouring situation is based on the relative merits of the closing price. Notice this one here, this bar, even though it closed higher than it opened, the whole bar is red for the simple reason that that closing price is lower than that closing price. It's simply a matter of getting to know what is the color version based on your individual supplier and who is your software provider. Again, same story. Here we have price, and here we have time, only though this time we are using monthly charts. So the open is the first trade for the month. The close is the last trade for the month. So it's slightly different. You can see it gets out of harmony, particularly when you've got places like, some days, some months have got 31 days, others have got 30. Then you've got February with 28 or 29, depending how it feels. We will be spending a lot of time for investors working on monthly charts. Very, very useful beasts. And just look at this. See how that's going shooting up there? You put a line up underneath that and say, hey, guess what? There is a trend. That's in an uptrend based on the monthly charts. At the moment, it's just going sideways, doing very little. So we will be able to talk about these different points, what they mean and what their relevance is, but it is simply a representation of the high, low, open and close of the price activity that has occurred in this particular company, depending on the time that you're on. I won't be going to show you any, hour charts or 5-minute charts or 10-minute charts, whatever, because you know what? They look almost identical to this. Something where there's a lot of activity that goes on, a lot of activity on some of the shares, you'll find it looks just the same. So all you need to do is change this, the scale, the time scale down the bottom. So what are the best charts to use? What is the best charting type? Well, it all comes down to personal choice. There's no other way to handle that. And you'll find people who are very bigoted one way or the other. Well, just get used to them. You can talk to them. But just if you've got a general knowledge of some of these things, it all helps. And sometimes it is good to swap between bar charts and candle charts because along the way you're going to learn certain specific patterns of activity that occur. And once you start learning some of these patterns of activity that occur, you'll find that it becomes worthwhile being able to speak a couple of these languages, the language of chart. So it's not what you've got that makes the difference. Okay, it's not whether it's a candle chart or whether it's a bar chart, but it's what you do with what you've got. That's going to make all the difference. So no matter which way you're going to go, you've got to learn the ways of the charting. Learn the ways of the Force, said Obi-Wan Kenobi to Luke Skywalker. So it's up to you to spend the time. It won't come overnight when we start talking about learning chart patterns and drawing lines on charts and the like. It won't come overnight. It's going to demand time and effort. Trading, people who come to trading thinking they're going to make their fortune overnight have got rocks in their head. It does take time. You've got to do it to a plan, and we'll be talking about that more as we go through. So the whole purpose of today, this particular presentation, was to introduce you to line charts, to bar charts, or high, low, open, close bar charts, to introduce you to candle charts, and just to be made aware there are these other things called swing charts. They're all valid and valuable tools for the trader, the technical trader. You're going to learn, if you are serious about it, you will learn the ways of the whole thing, learn the ways of the Force, learn the ways of the trader. And to finish off, may the markets go with you. Thanks for listening. Good luck, and I look forward to catching up with you in our next in the series of education towards technical analysis. Cheers now.